Okay, so this is the fifth and final video for manufacturing, outsourced manufacturing in Fishbowl. So I've got 4 other videos, talk about set up the bill of material, creation of the work order, fulfilling of the work order. This video is going to focus on the accounting side of things, how all of this affects QuickBooks. So I'm going to do an export to QuickBooks and show you the transaction that Fishbowl sends to QuickBooks for fulfilling those 2 purchase orders and those 2 work orders. And then we're going to sort of split things up into 2 and have one bill in Fishbowl represent one of the work orders and one bill in QuickBooks that represent one of the work orders. So I'm Lance, inventory software expert since 2006. Let's take a look. So if we want to see what goes over to QuickBooks, the first thing we want to do is go to Accounting, Accounting Integration, and click on Export. So everything that's queued up and ready to go over to QuickBooks is going to start going over to QuickBooks. It's validating the data, and then it's going to start sending things over. Item receipts, bills, reconciled item receipts, but manufacturing adjustments are the main things that we want to see in this video. In the previous video, we created 2 of these 3 manufacturing order adjustments. Also, we purchased inventory, specifically inventory, from a couple of vendors to supply the fabricator. In the previous videos, we did not create a purchase order for any services. Okay, so let's take a look at mainly this is really all we want to see. We know what bills look like for inventory, but you'll probably want to see what these manufacturing adjustments look like in QuickBooks. So what I'm looking for is our clearing account. Search for that keyword. Let's take a look at the register for the clearing account. And yeah, this is one thing that always throws me with using the sample files of QuickBooks is how the dates are ski-wampus. So we need to look at, okay, so we've got something to look at here, but I think we're looking at the wrong clearing account. No, it's the outsourced manufacturing clearing account. Okay, whatever those other ones were, that was probably a different date, or I don't know what we clicked on. But we're looking at what we want to look at now. That's the important thing. So we've got journal entries created today, the journal entry number, and the main thing that we want to see is the memo that Fishbowl creates. So notice it references the work order number and the part number on this memo. Let's just drill into it. And we see the general journal entry referencing the work order number for the adhesive. And we see that it's hitting the outsourced manufacturing clearing account here and referencing the work order numbers and the finished good that it's creating. See, it says we created this finished good right here. And to get the full picture, we need to understand what account this finished good is mapped to. So let's go back to Fishbowl and take a look at the ANAD finished good and the ANBA finished good. We need to see what each part is mapped to. So we're going to go back to Fishbowl just so we have a clear picture here. NAD is mapped to just the average inventory asset account. So we've got some raw materials that are inventory type materials here, ANBA, GL001, HW001. And those ones we can see if we click on it and go back and forth here. ANBA, ANAD, GL001. See, these are all mapped to the same account, so those ones are just going to kind of be a wash because it's going in that account It's coming out of that account, in that account. So Fishbowl doesn't create any journal entry specific to just that. But then this pressure treatment, this is hitting this clearing account. So this is going to get a credit of whatever amount this adds up to be right here. So $44.50 is what we should see credited for this specific entry, for this specific work order 41001. We should see a credit to the clearing account for this part number. Outsourced manufacturing and clearing should get a credit, and then this finished good should get the debit for this work order. So let's go look at that here. This is the 41001 ANDA showing inventory coming out of outsourced manufacturing clearing and going into the general inventory account. Other places to see it, this shows it a lot easier. You see that this is outsourced manufacturing clearing that it's focusing on. The journal entry applied to that is a negative amount in the clearing account. If we look at the P&L for today, we'll just see this amount as a negative on the outsourced manufacturing clearing account. And this is the two combined. So this number is the total of these two numbers right here. Our 44.50 plus 25 to 69.7, and we've got 69.7 there. Okay, so for the next step, let's create a bill in Fishbowl. We got to create a purchase order and then receive it, and the purchase order is going to be just for the service type item. And we've got two work orders, so we can split this nicely. We can have a purchase order for one of the work orders in Fishbowl and fulfill that purchase order, which will create a bill in QuickBooks. That's one way to do it if you would prefer a Fishbowl user take care of this, right? If you would prefer a QuickBooks user take care of this, then the second example I'm going to show you is we're going to create just a bill directly into QuickBooks and clear this out. So we've got two part numbers. We've got the pressure treating and the hard coding. Let's do the pressure treating in Fishbowl. We'll go to purchase order, new. And I actually never created Joe's Fabricator as a vendor in a previous video, so I just created Joe's Fabricator as a vendor. And then we want 44.50 of pressure treating. Make sure that's right. Yep, 44.50 of pressure treating. Unit cost should be $1 for this item. So the quantity is 44.50, unit cost is $1. You can do it however you want, honestly. You could put quantity of 1, unit cost 44.50, or whatever you want. As long as the price adds up to 44.50, that's all we care about. This is just the service that the fabricator performed. So then we can issue this purchase order. We're not going to send this purchase order to the vendor, right? We already sent the manufacturer order to the vendor. He already performed the work. We're just entering the bill. The only reason we're doing this is to enter the bill. So I wouldn't even put this purchase order in advance. Now, one thing we can do is make this purchase order the same number as the manufacturer order. That won't hurt anything. That might be a nice way to organize things. Looks like a PO already exists with that number. Nature of doing demos, right? So, okay, we'll put that in there for demo sakes, and then go to receiving, receive and reconcile this. So we're going through all these steps just to create a bill in Fishbowl. So for that reason, I kind of like the other example I'm going to show you next. The only advantage I see of doing it this way is a Fishbowl user can do it. So if you'd prefer a Fishbowl user to do it, It's going to take a couple more steps, but they can do it. They got to create a PO and receive it and then reconcile it. So this would be the vendor's invoice number. We'll just pretend like that's the number. And the bill date. And here we can, fudge with the bill total, make sure it's correct. And we can put in a shipping charge here as well. I don't really want to get into that topic. I want to keep this video simple, but that's another thing we can entertain, is adding shipping to the bill of material and adding shipping and landed cost here. But let's just create this one video simple. This outsourced workflow is already complex enough. Let's just keep this simple and skip shipping for right now. And then we've got the bill cost. Now, when we finish this out in Fishbowl, this is going to queue up a bill of material to be exported to QuickBooks. So when we go click export, or when the auto export runs in the middle of the night, it will just send this over to QuickBooks. So now this is green again. That means we just did something and it's queued up and ready to go to QuickBooks. So we'll click export and watch the magic happen. Watch it flow over to QuickBooks, and there we go. We created a bill in QuickBooks and reconciled an item receipt. So basically the net result is we created a bill in QuickBooks excuse me, for Joe's Fabricators. So if we go over to QuickBooks now, go to Joe's Fabricators, we'll see this. Joe's Fabricators. There's our bill. It's hitting accounts payable. And let's see if it's hitting the correct, the other correct account. So this item, pressure treating in Fishbowl, this should be debiting whatever account this part is mapped to and crediting payable. So let's take a look at our P&L, and it did not go to the clearing account. Now we had this pressure treating part number in Fishbowl mapped to the clearing account. Let's just double check that. Yeah, so this part number, the pressure treating part number, which is a service type part, is mapped to the outsourced manufacturing clearing. So when we received it and reconciled it, it should have debited the outsourced manufacturing clearing and credited. Oh, I know what it is. I backdated the bill. Let's refresh this. I went one day back. So the bill date right here is May 16th, 2023. So this should be clearing it out. Let's go back one more date. Let's go forward one more date. It should be clearing out. This is just a general service expense. It should be mapped to that because we overrode that with something else. Let's look at the transaction journal for this bill and see what it's doing. So Joe's Fabricator, that's the bill, the date 5/16/2023, PO number 41 dot, account, it's hitting accounts payable, it's debiting accounts payable, it's debiting outsourced manufacturing clearing, just like I said it would. It's crediting accounts payable, just like I said it would. For some reason, it's not pulling up on our P&L. I think this might have something to do with the sample file dates. 5/16/2023. Yeah, the P&L, May 15th to 18th, just did not change in that clearing account. Should have one more journal entry right here on May 16th. Let's take out all these dates because we just barely created this account. Take out the date factor altogether. Wow, it's saying it didn't hit that account at all. The running total on this account should be a negative 2520, not a negative 6970.